Good morning, everybody. Thanks for coming. I just wanted to start out with a couple of quick announcements before we start class. I have done, I have stacks, letters A through N, on a variety of your post-grad plans and your resumes. We've made some comments at the top. Please go ahead and pick those up. If I don't have yours, most of, let's see, so N through Z I do not have yet. There are a couple in the last name A through N that I'm missing, maybe 2 or 3. If I am missing yours, it either means that I don't have it or you submitted it late, so I haven't gotten it into the system yet. But you're welcome to come pick those up after class. And then we have one other announcement, and that is tomorrow there's an MBA information session from Chicago booth tomorrow, 3 p.m. in W240. That also conflicts with the NAC mentoring meetings if you're participating in those. Again, the link for that is on Learning Suite if you'd like to participate. 2 events, and should we turn time over to you, Kim?
For those of you that were here early, I apologize for our DVD not working properly. It was to show a hobby of a finance-related person. So we'll get that to work and show it to you another time. It's my brother, one of my older brothers, and he's one of the world's foremost collectors of military stuff. And it's a fun time. So what we wanted to do today was give you a little more exposure to different kinds of jobs, different kinds of careers and internships. And so we brought some students that are seniors this year, graduating, had great summer internships last year. We're going to various types of jobs and want to give you an opportunity to hear them and also ask questions. So we'll begin with Steve Funk, who's the head of the Finance Society Club.
All right.
Yep. Can you guys in the back hear me if I just talk louder? Alright. So, like Kim said, my name is Steve Long. I'm a senior here in engineering school. I major in finance, and this past summer I contributed a whole bunch back out of New York in the and I ended after after I graduated. So that's just my background. I've taught internships. And the way I think about internships is some of you may know this, but I think internships backwards. So my goal was a full-time job at graduation in financial services and investment. In order to do that, I need to have an internship by the end of the year at the firm that I wanted to work with full-time. And then for that summer, I needed an internship to get an internship. And so if you think about it backwards, goals is backwards. So I'm going to talk a little bit about how to identify a good internship and the difference between a junior internship and a sophomore. So obviously as a sophomore, you don't really have a lot of experience when you start building your resume. You don't really have a lot of finance on there. You work at a part-time job. And then the way that you leverage that and translate that into a sophomore solid internship is by taking advantage of the resources that we have on campus engineering school. So you can start with an on-campus internship class that you sign up for. If you haven't done that this semester, you will next semester. And that can give you some sort of experience relevant for us. And then you start looking as a sophomore for an internship that summer, and you can leverage it and show to firms who read here that, hey, I'm really interested in finance, I can do my homework, I'm passionate about it, I've done this kind of work in it, and that's why I'm going to be a good intern for you guys. And so that's kind of what you want out of your sophomore year. Just as examples, there's lots of firms in financial services and corporate and companies planning to hire software. It's not something that's impossible to get a great internship as a sophomore. But you have to hustle a lot more, you have to do a lot more personal time. You may not have time to have more processes that they hire software from, but it's very possible. So I would encourage you to look into your personal network of people that you know from back home, your family, your board members that you can ask, and if you're trying to hire interns, you know people that work in the industry that hire interns. You can look at the UYU website for internships that apply to you and identify why would I do that? And my answer to that is I think you don't have to do that. You want to take the moment out, it's very short-sighted to do that. As you run through the process and you invite people out with back, I think it's the best thing for yourself. Go to the store, and set of skills, and you can translate it to something in the future. And not saying that it's firm that hires other companies to do that or like that, but in your position as a senior career finance, you need skills that are more valuable that you need to invest in yourself. And I guarantee you that if you give up that opportunity now, in the future, you see the some sort of software, other related to financial capabilities you have, your earning potential, you can be much higher. And I know that I had practiced a lot of my jobs out there. I'm optimistic about the future earning potential that I'll have in my career. And I think that's a goal that we can any advice that you see something on the side or you're thinking that so please understand that. So I think that's how you look at what's beneficial, what's not. A set of skills and a relevant experience that I'm going to be able to go to the firm that I want to work for and show them that hey, I'm passionate about this. Do that and when you come back, I can do it. And you guys are in a position now. I guess we're trying to balance it. Businesses for the moment of school. And they're going to be able to do much more of what they can do. That's what it's for. And I can speak to the board in this I did that if you were to know a person with that long out of resume, I my thing I did looking at that and say, this person is passionate about finance because that's not what they come from
Okay. All right. Well, I'm Jace Adams. I spent the summer at Fidelity out in Boston. Can everyone hear me? Yeah? Okay. All right. So I've been asked to speak about just kind of the day-to-day work as an investment or as an equity research analyst at Fidelity. And I've been asked to both talk about a typical day and then kind of a super day or an extraordinary day. So a typical day at Fidelity, I usually get in the office around 7 or 7:30, and it's usually pretty quiet in the morning. So that's the time when you're going to start building financial models. You're going to be reading 10Ks, 10Qs, any sell-side research that's been published on the companies that you cover. So maybe as a reminder, an equity research analyst, they cover stocks and they want to come up with an investment thesis and pitch it to the portfolio managers. So you're really being paid to learn and to do research, and so that's what you spend most of your time doing. And there's several ways that we do that. We'll also spend a lot of time on the phone with sell-side analysts from any number of investment banks. It could be JP Morgan, Goldman Sachs, Credit Suisse. We talk to the sell-side analysts that cover the companies that we cover, and we try and get as much information about the company that we can in order to gain an edge over the market. Because we believe that the more you understand about a specific company and the stock, the more you understand it, the more you're likely to get the valuation correct, and you can take advantage of the market efficiencies when a security is mispriced. And so we'll spend a lot of time on the phones, talking to sell-side analysts, building models, and then eventually we'll start talking to the company itself, talking to upper-level management. So I spent a lot of time on the phone or in-house. The companies would come into Fidelity, and we'd sit down with them, and we had an agenda where we ran through. We could ask them about their strategy, about their financials, about their competitive positioning, about the competition. So I gotta have one-on-one FaceTime with CEOs and CFOs of public companies, and eventually, what you're asked to do at Fidelity is write a research report, and so it's similar to what a sell-side analyst does, except it's published internally only and it's proprietary. And so what we do is we publish it internally, and then we'll go around to the portfolio managers and pitch basically our investment thesis to those portfolio managers. And so these managers manage, upwards of, I think the largest fund is like $75 billion, and they're trading stocks on a day-to-day basis, and they really leverage the analyst work in order to get an edge and to build a portfolio. And so what we'll do as an analyst is, after we've published a piece of research, we'll walk around essentially these offices and just pitch, and maybe spend five minutes pitching the investment. Either it's a buy or a sell or a hold, and then we tell them why. We show them our models. We run them through the numbers, and depending on the interest, it could spark a conversation or a follow-up or any number of things. But so I guess a super day for me over the summer. Part of the internship is we cover a certain number of securities, and at the end, after we've published our reports, we actually go in front of a panel of portfolio managers. So there were people in the room, there were probably 10 or 15 people in the room, and I had about 20 minutes to convince them to either buy or sell a stock. And these are world famous investors. Joel Tillinghast, who has a better 20-year track record than Warren Buffett. Will Danoff, who manages like $75 billion. So these are world-class investors, and you can learn from them. They ask you questions, they challenge you. So you really got to be on your feet. You've got to know your stuff. But that's really the culmination of it for me, is being able to sit in front of them and to pitch a stock to them. And they actually made buy and sell decisions based on my recommendation, and either put the stocks into the portfolio or took them out based on what I recommended. So that's kind of a typical day for the internship. Full time, you'll be doing a lot more traveling. You'll go and visit the companies. You'll go to conferences. You might do proprietary research and visit storefronts or retail locations. Talk to mid-level management and try and get an edge over the street. And so that's kind of that. Are we doing questions as well, or not right now? Okay, so that's kind of a day in the life of Fidelity, and I think we'll move on to the next.
So, hello everyone. My name is Khalil Abwani. I'm a practice student. Can you guys hear me? I don't even know if this works or not. Oh, there you go. Now I hear you. Or can you hear me without it? Okay.
Basically, I'm studying finance. I'm super senior. Going back to your question about software, so you can save that money.
Okay, so going back to John's question about sophomore internships. So you could say that my sophomore internship, or the one prior to the one I did, was at JP Morgan Asset Management in New York City. But then my actual sophomore internship was just at a nonprofit organization doing something not close to finance at all. But so basically, and going back to what Steve said about how you need to just gain experience and be able to talk about it later on in interviews and twist it in a way that's applicable to finance. I was actually able to do that, even though I was even after an internship at a nonprofit that had nothing to do with finance, right? So I just told them about one of my research projects that I did at this nonprofit that concerned the small and medium-sized enterprises in a third world country, right? And if you think about it, how is that applicable to finance unless you're trying to open a bank or finance these guys? But I was just able to twist it in a way, being like, okay, I did in-depth market research. I was able to understand the market from different points of view. I was able to understand the needs of it, how it's making money, how it's losing money, all these sort of things. And I mean, this is all applicable to anything in business, and you could just twist it in a way and make it applicable to finance, right? So I got my internship at JP Morgan Asset Management. I'm gonna be discussing a little bit about that. So basically, I was in the private banking arm. And private banking, for those of you who don't know what private banking is, it's just basically you're managing the money of those who made it, right? So you've got people that have $500 million in their bank account. They're not gonna keep it there, make a 1%, 2% interest on their deposit. They need to invest it. And these people are very busy in the career that they chose or in the thing that they're really good at, and they want to invest that money, and at the same time they want to diversify themselves from the thing that they're good at. So if you've got Bill Gates, he's not going to invest all his money in Microsoft stock because he needs to know that if something goes wrong and he messes up, he's going to have a little bit of money left, right? By a little bit, I mean 50 or 30, 40, 50 billion dollars, right? So what he does is that he goes to one of these private wealth managers or private bankers, tells them that, hey, here's a portion of my money, I want you to invest it for me. So, and the big private banks have a lot of research arms, a lot of teams that focus on different parts of investing, and they invest it according to his mandate, whether he's trying to grow his money, whether he's trying to gamble with his money, whether he's trying to do whatever he wants with his money, right? And by gamble, I don't mean like actually gamble, but make risky investments. So a day of the life of an analyst in private banking basically consists of coming in around 7 o'clock, because you could argue that private banking is related a bit to the markets, depending on your role. But a typical role would be like, well, most of the people are related to the markets, because you're gonna have people calling you up, investors calling you up, being like, I heard about this happening in China overnight. How's that gonna affect the money I have invested, right? So you come in, you brush up on, as an analyst, you come in, you brush up on the news, you try to see what has happened the night before, send a few reports to the bankers or the senior bankers who are the guys that manage the relationship. And then, yeah, I said you get in around 7:30, if you guys didn't get that, or I don't know if I mentioned it. But basically, after that, you send out the reports to more senior guys. You're sitting there just as a right-hand man to that banker, right? So you've got these bankers traveling around the world to meet with their clients, taking them out golfing, taking them out to the US Open, Super Bowl, all these sort of things. And you're the guy behind the scenes who are getting things done for these guys, right? So you're creating pitch books for these bankers who are going to go meet with potential clients, try to convince them why they should put their money with this bank and not that other bank, etc. You're preparing letters to investors that just put their money in your bank, and trying to thank them and write a letter and recommend a book and send it to them. So sending gifts is part of it. Like the things you can do is just very diverse, because if you think about it, you're just the right hand, like you're literally the right hand man of that senior banker who's managing the relationship, and whatever he needs to be done has to be done. So it's client driven. It's very client driven. I would say semi-markets driven, and it's a very exciting career for people that really enjoy spending time with people. I mean, potentially in the first year or two, you're not going to be meeting with clients face to face, but later down the road, when you're the relationship manager, when you're the gatekeeper for that guy to the bank, you're going to be the one meeting with the clients, taking them out, and ultimately the best fit for these kind of roles are people that are really good in dealing with people, convincing people. So it's basically, the way I look at it, it's, as bad as it sounds, it's a glorified sales role, although it's not, because you're not selling a product. You're trying to sell a platform, you're trying to sell your bank as being the best out of them all, and trying to show people what you can do to them, what you can do with their money and all of that, right? So that's basically private banking. Okay, so that's private banking. And then, so after that, I went and did my junior internship in sales and trading, which is a little bit different. So in sales and trading, it's basically the arm of the investment bank that does institutional trading for clients. So Jace just talked about Fidelity, right? So Fidelity are going to go and Jace is going to go into the room, pitch Apple stock to his portfolio managers, and they decide they want to buy it. How are they going to buy $1 billion of Apple stock? They need someone to execute that for them. So they call the investment bank, the trading arm of the investment bank, and ask him, how much are you quoting Apple stock? Or for Apple stock, it's a very liquid stock, so you'll be able to see that number on the exchange and just trade with it. And I'm gonna get back to quoting in a second. So that's the role of sales and trading, right? They're just the execution arm of the investment bank to execute trades for institutional clients. So day to day in the life of an analyst in sales and trading, you get in pretty early, let's say around 6 o'clock, 6:30 at the most, because it's very markets driven. So if the markets are opening up around 9:30, you'd have to be there a few hours before, catch up on what has happened the night before, and be able, if you're in the sales role, you have to come up with ideas and explanations of what happened the night before, because you're going to have clients calling you up trying to get explanations, right? Because you become the expert in the product you're selling or the product you're trading. So in a sales role, I'm going to just talk briefly about the sales versus a trading role. So in a sales role, you're supporting the salesperson for that sector or for that product. So you've got interest rate sales, and you've got credit sales, and you've got equity sales, right? You guys understand the difference between equities and bonds, right? So for credit, these guys are the ones that sell corporate credit, corporate bonds. For interest rates, these are the guys that sell government bonds, and for equities, these are the guys that sell equities, right? So, and something happened to Apple the night before, a bad report comes out, the equity sales guy needs to know and draft and know to all his clients, being like, okay, this is what happened to Apple last night, and this is where we think the stock is going to be heading. The trader is going to have actually some Apple stock in his portfolio, and he's going to be the one trying to manage the risk and see how he should trade Apple that day to be able to minimize his losses or to be able to make a profit. Because the trader is the one that's holding the inventory and responsible for the profit and loss at the end of the day. And the sales guy is the liaison between the trader and the client. So a typical day in the life of a young sales guy, you're going to go in, help the senior guy draft reports, draft all these sort of things to the clients. And then after that, a typical day would be just like getting on the phone with the clients, trying to assist them in their trades, and execute the trades through the trader, and at the same time give them an idea on what's been happening in that specific sector you covered. So an exciting day for that would be that something exciting is happening in your sector, right? Because if you think about it, every day is the exact same as the day before in terms of the time you get in, the time you get out, the time the markets are open. So you know every time that when you leave Friday night, you're not coming back to Monday morning because the markets are closed. You're not going to be doing anything, right? But then, and you know that you're going to be in every day from 6 to 6, let's say, because typically it's an 11 to 12-hour day in the junior role. So an exciting day would be when something exciting happens to the markets. So let's say if the Fed is coming out with a no that day, FOMC meeting, whatever, that means that it's going to be an exciting day. A bad day would be a day where, on a Friday afternoon when everyone's already out in the Hamptons and no one's trading or doing anything, right? For a young trader, so for a trading role, you're doing more quantitative stuff. You're not the one who's interacting with the clients as much. You're the one who's developing these pricing models, helping the more senior traders maintain these pricing models, help them price them, and later on, a year or two later, you're gonna be able to gain a little bit more responsibilities and be able to trade on that senior trader's account. And a few years down the road, is when you're able to actually get your book and start trading and have your own P&L. And for that role, as I said, same hours. You're working 11 to 12-hour days, market days. You're not working Saturday, Sunday, and you're going in at 6:30, coming in, looking at your market, getting up to date on that, looking at the P&L and what happened the night before. If you've lost money, made money, that same day you'll be able to assist traders in pricing. You'll be able to get on the phone with clients and be able to execute if the trader allows you to do that. And the more experience you gain, the more execution you'll gain. And then, as I said, 2 or 3 years down the road, you'll get your own book and have your own P&L, and then you'll have your own set of clients. So that's mainly it. I hope that was a short time to talk about 3 different career paths, but I hope that was comprehensive enough, and happy to answer any questions after this.
Awesome. Good morning. Does this work? Is this working? Okay, she says it's working. She's the boss.
Hey, so I'll be loud, so that means space. Just a few people in my name is Stephen Case. I'm the Corporate Finance Club president. Spent the summer at Apple. Had a fantastic experience. I'll be going back full time to development for next year. Just a few little things that are first is our summer development here. Right now we're accepting applications from tomorrow for Silicon Valley. We've had more interest than we can take so far, but if there are more qualified students out there who want to apply, it's going to be a fantastic that might be tomorrow. Second, I just wanted to say, if I could give one piece of advice about university advice, that not only you're going to be interested in summer, maybe in the role for economic experience, if you remember that nothing is going to do, you should be looking to better that you will well. About corporate finance, oh yeah, someone asked about what I did with my summer. Well, I did not teach you how to price, all of them do not get maybe 2 months, yeah, he's a good sophomore teacher. I did not about and I'm not going to say it perfect, I still got my new job, but I generally have more than 2 months of if I wasn't going to make it, make sure you are
Putting forth that effort. Is this any different? Okay. Yes. Make sure you're putting forth that effort to make up for the fact that you do or do not have experience in your resume. With regards to corporate finance, I like to talk about my experience in worldwide operations finance at Apple. What we essentially did as a team was manage Apple's supply chain. There are hundreds and hundreds of suppliers, and we spend upwards of $80+ billion. That's our COGS. It's about $90 billion probably plus this year. That's a lot of money. That's a lot of cash. And the ones that we're spending this with are our suppliers, the ones who are actually creating our products. And so from a corporate finance perspective, we needed to figure out who are we spending our money with? Are they safe? Can we rely on them? Are they creating products for us that are on time, that are on quality, that meet our standards essentially? So to talk about a typical day for me, got in the office about 8, left around 6 or 7 every day. I was working 50 to 60 hours a week. That's pretty typical for corporate finance. We had the opportunity to perform financial analysis in essence. In some ways it's similar to what these guys were doing because we have hundreds of suppliers and we need to know where they're at financially. Are they healthy, are they not? Are they going to have cash to continue operations for more than 6 months? We have a big product launch in 7 months. Are they going to go out of business in 4 months and all of a sudden we're going to be in huge trouble, you know? And so typically I would analyze these big companies that we're spending billions of dollars with. We'd figure out from their financial statements, we'd figure out from news, from investor, analyst reports, what was going on. If we could trust them, if we could not. Those companies that we had concerns about, we would get on calls with them and we'd have phone calls with the CFO of their company. I did that dozens of times this summer actually. And we essentially managed Apple's supply chain. The flip side of that was when there were high-risk suppliers, we had to go out and do special deals with them. Whether that was giving them a prepayment or purchasing the CapEx with them or lining up certain legal agreements that would protect us and our intellectual property. Just a very wide role, huge exposure, and I ended up loving supply chain. And that's my first plug for corporate finance. I didn't know I liked supply chain. I had no idea what supply chain was. But because I was in corporate finance, I got to do finance for supply chain. Just like you can do marketing finance or sales finance, or you can do R&D finance, or you can do engineering finance. Finance within a corporation is, in my opinion, the most exciting that finance becomes, because you get exposure to other professions, other, not industries, but other professions, other job roles, while still performing a financial role. And so to talk about that, I want to talk about maybe some of the other opportunities I'll have in my development program, what other teams I'll be on. There's a marketing finance team, which essentially analyzes how well our marketing is doing, how much more we should be spending, where we should be spending it, doing analysis on that. There's an R&D finance team, who's figuring out, okay, last year we spent $7.5 billion in R&D. Should we spend $9 billion this year? What's going to be our return on that? Is it worth it? There's a sales finance team. Apple sells through the website, through stores, through third-party retailers like Best Buy and Target, through education, through businesses. And so we need to track all of those different routes. We need to figure out how we're selling, where we're selling. We need to figure out worldwide how we're doing. And so corporations, like many of the ones that are coming to recruit now, are all multinational and all have very different products, departments, geographic regions. Each of those and every one of those needs finance. And so finance always has a seat at the table, and we always get involved in the business because we touch every part of the business. And so that's just a plug for why I believe corporate finance is really truly exciting, because you get broad exposure to a company as a whole. If I really like marketing finance and I said, hey, you know what, I love finance, but I want to make a switch, I go to the guys I was working with before and I said, hey, I've been working with you for full 2 years. I've been doing the finance aspect for you. I'd like to switch and come work with you. And they say, hey, why not? We really liked you. And then I can switch over into marketing. Same goes with really any different field. Once you're within a corporation, yeah, you can specialize and you can stay within that and move up the ranks. And that's typically what occurs. But there's also lateral transitions, if you'd like that. One other piece I wanted to talk about really quickly was about kind of what is expected, what they expect of you. They expect you to know the financial statements like no other. You need to be able to understand them backwards and forwards. If you get put in maybe a financial accounting role, you have to be able to prepare the financial statements. If you get put in more of an analysis role where you're deciding how are we doing, you got to be able to understand how the financial statements work. Other people will be forecasting, or they'll be building different models. So what you're learning right now in your finance classes, all of it is relevant. Please remember that, and please remember what you're learning. Just really quickly to finish before I turn it over to my friend James, a great day for me was when we were working on a project that I got to work on specifically that actually dealt with billions and billions of dollars, and it was a new supplier financing initiative that we're working on. And I had arranged a meeting with our corporate controller, who was next in line to be CFO, and he took the time to meet with me because I was an intern and they treat interns well. And I met with him and I was talking, we had a great experience, and then he said, hey, what are you working on right now? And I mentioned what I was working on, and he said, hey, that's the most important thing to me right now. That's what I'm most concerned about. How's it going? And so I got to say to him, well, it's going really well. I spent the last 200 hours of my life on it, and this is what we've come up with. This is what we're doing. He was super impressed, and he gave me personal advice about what to do, what to change, and different things to work on. So that was just really cool to see that what I was doing truly had a difference on the business that I was working for, and it just made me feel good about the work I've completed there. So with that, I'll turn the time over to James Morris, one of our Vice President of the TRIPS and Corporate Relations, and he's going to talk about his experience at BP.
Good morning, everyone. Hope you all are doing well. I'm pretty excited to talk to you about this opportunity that I had this summer. Kind of to to follow what Steven said, I was in the same boat my sophomore year. I didn't really know exactly what I wanted to do within business, so I was kind of late in going to look for internships. So I spent my time finding the best on-campus internships I could, and I worked really hard in those internships to give me the experience that I needed to be able to apply for these internships with larger companies. And so remember that experience is what you need to get into these interviews and to be able to excel in these interviews. So I really encourage sophomore interviews, if at all possible. I know most of you are juniors, so at this point it's kind of a moot point. But as for myself, I spent this summer working for BP, formerly known as British Petroleum. I was in Houston, their corporate headquarters there, and I was on a pretty exciting team. I was working on one of the operations teams for the Gulf of Mexico. So I was one of the analysts on those teams. And so a typical day for me would be, for example, on a Monday I would get in about 7:30. I would walk up to one of the floors where a lot of the engineers and geologists were sitting, and we would have a conference call with the platforms offshore. So I don't know if many of you know how you drill for oil. And it's probably not that important at this point, but essentially you have this big, massive platform that's about the size of our stadium, Lavelle Edwards Stadium, that's probably even taller than the stadium, that drills miles and miles and miles beneath the surface of the earth to extract hydrocarbons. And so we would actually sit in meetings with the engineers and people offshore to discuss the events of the week, which we would then that would impact our relations with Exxon or other companies that we were dealing with. And oftentimes we would gain information that we needed for our cost forecasting for the next month or quarter. And so the role that I filled was a typical financial analyst role. I did 3 projects, some cost forecasting, some economic evaluation, and then I did some help with some accounting stuff that they needed there in the Gulf of Mexico. So that was my typical day, was working on those projects, talking with the controllers, speaking with the engineers, getting insight on the inputs that I needed for my models, and then going forward, building those models, and then sitting down with my managers and other executives to explain the information that I had found. A really great day was it started out as a normal day, but I had finished a project that I was working on. I was looking at evaluating an expansion for a facility that they were using, and I sat down with all the supply chain managers and I pulled these inputs. I incorporated it into my model, and then I sat down with the CFO of the upstream and was able to explain to him what I had done, and he spoke with me about the various difficulties that we were having in the Gulf of Mexico, and specifically with the asset that I was working with. And then a few of his other leadership team came in, and then we were able to have a great discussion with all of them and talk about some of the challenges that are being faced in the industry, and it was a great experience. I learned a lot about the fact that these corporations, they really want to see you succeed in your job, and they're willing to do anything that will help you in your career advancement. And there's a lot of great opportunities in corporate finance, and we're more than happy to talk to you about those opportunities if you need them. So.
Hey everyone, I am the non-finance major in the room. My name is Kyle Nelson, and I am actually a sociology major. I am a business strategy minor, so I can speak your language a little bit. I'm here actually to represent management consulting. I'm not exactly sure what this new system is actually.
Your seat holder.
But even without that, I can. Is it HDMI jack or is it? Oh, there we go. Yep, there we go. Okay, awesome. So I'm here to talk about management consulting. I understand most of you are juniors, and this is a perfect time to be starting to think about it. Management consulting is kind of a lot of what you just heard from these last 4 or 5 presenters wrapped up into one. I'll just explain really briefly what it is, what my experience was like this summer. I interned at McKinsey & Company, and then how to really quickly think about, if this is interesting to you, what you want to do to get in. So management consulting is essentially when the world's biggest and most complex organizations come up against a problem that they're not typically used to solving. Something just goes completely awry, like a train somehow comes out of the second story of the train station. No idea how to explain what happened or what's going on. They turn to consultants to come in and add some outside perspective and some analytical expertise to hopefully provide the most optimal solution. So another way to think about it is some of the companies you can think about who've had some major struggles in the last years will say, you know, we have some real problems, we can be successful, we have capabilities to compete, but we need some advice. And consultants will come in and they'll provide structure around very nebulous problems. They'll provide analysis and research, and then they'll work face-to-face with the CEOs, CFOs, CMOs of these organizations to redefine the strategic approach of these companies. It's not always companies that are struggling. A lot of times it's also new opportunities that have come up, and they'll say, we need some advice on how to best optimize around this opportunity. And so consultants will come in and provide that advice. So for me, this summer, I was at McKinsey & Company. She said, tell us about a typical day and then your best day. It was hard for me to kind of like separate out the two. I just enjoyed every minute that I was there, and this is a typical day, literally, of how almost all of my days went. You start out the day usually what we call problem solving. So you're literally standing around a whiteboard, trying to put some type of structure or understanding around a very nebulous problem. For us, it was the finance organization within a utility company. The utility company was basically going to be doubling their revenues in the next 2 years, and they needed to know how to restructure the finance area of the business to be able to handle the uptake and scale. And so we're sitting here like, what's the best, most optimal way to structure the finance? So all these people that just presented, they're all working in this department, and then the consultants come in and tell them how to like reorganize and how to work to handle this increase in scale. So we're sitting around a whiteboard, standing around a whiteboard trying to figure that out. As the day goes on, you definitely spend time in PowerPoint and Excel trying to really put some analytics around your ideas. But you also have really cool opportunities. I was sitting across the table with the VP of Finance multiple times a week, talking through like how are you going to integrate these new businesses that you're buying. And then I also had really cool opportunities to sit with partners at McKinsey & Company and hear about past projects that they had done, including working with governments around the world to basically change the way that the world works. And that kind of leads me to the next point. If we really want to think about why should we get into consulting, one of the reasons why is because, as was mentioned about working at Apple, you could work in all these different functional areas at Apple within their finance. But imagine doing that across industries as well. That in any industry that you want, you get the opportunity to work in any functional area. Over a 2 to 3 year period, you'll probably have 8 to 10 different client engagements, and you have the autonomy to really go after and look at what it is that you want to look at. And to me, that really matters. In fact, just over the summer in 10 weeks, I was in 3 different industries, 4 or 5 different functional areas, as I worked with clients on some pretty extensive problems. The oil and gas one, I think the finance majors will be particularly interesting. It was a bunch of essentially rich oil barons asking, can we become richer oil barons? Like, can you help us do some financial analysis around where and how much oil we should be drilling in Canada? So that was really cool. I really enjoyed that. A lot of economic and financial models went into that analysis. Another advantage of consulting is that there's this huge emphasis on leadership and personal and skill development that opens you up to any type of career that you want. So after 3 years, a lot of people do go off to MBA schools. Others jump right into industry. And you'll see people you recognize, including Mitt Romney. He was obviously at Bain & Company, which is a great management consulting firm. But there's no doors that are ever closed to you. And I would say with anybody that's presented here, all of these employment opportunities aren't going to close doors. And so it's definitely worth the investment to get a stellar internship next summer, hopefully at the place you ultimately want to work, but anywhere that's going to provide you the brand name that you want to get into consulting or into investment banking or into the corporate finance position that you're looking for. Because you should think long term, your career is more than the next 5 years. Your career is going to 40 years. And consulting definitely doesn't close any doors. And it definitely helps you get into the MBA programs. I imagine a lot of you are really interested in Harvard, Wharton, Yale, and a lot of the other great MBA programs. 2 minutes? Okay, this is pretty much the last slide. And consulting is a huge pull into those programs, especially if you consider the fact that a lot of people in PE, VC, and financial services actually came out of consulting as well. And then finally, what does it mean? How do I get in? Consulting is very competitive, especially at BYU, because they're used to hiring Harvard, Princeton, and Yale guys and gals. And so coming out of BYU, it does take a lot of upfront investment. I highly recommend looking into the Management Consulting Club. But if you were to compare the hardest organizations to get into year after year, it's management consulting companies that are ranked up there. But it's definitely worth the investment in time. And so again, my name's Kyle Nelson, highly involved in the Management Consulting Club. So if you ever want to just show up and ask me follow-up questions, would love to tell you a little bit more.
Looks like class is about over, so we'll make this about 20 seconds. So investment banking, let's go back. Investment banking, I think, hands down, is one of the best career paths, especially if you don't know what you want to do, right? I mean, you get to work in everything as far as every industry. You get to work with all different types of products, M&A, any type of debt capital raising, IPOs. So my summer I spent with Credit Suisse. I was with the Financial Sponsors Group. And that meant that because I was working with private equity firms, we got to work on everything from sell side and buy side M&A activity to obviously that includes leveraged buyouts, any debt offerings, any IPOs. And so it really was a home run in every sense of the word. A typical day, obviously you know that investment bankers work pretty long hours, but that said, it's well worth it in terms of the experience you gain. Really within 2 years you're working 5 to 10 years worth of experience, and just on top of that, every single door is open to you afterward, whether it's business school, whether it's private equity, hedge fund, all the top exit opportunities recruit from investment banks. And so I think that alone kind of speaks to the value and the experience you have in an investment bank. And then I'm sure a lot of you want to know, when do you get out, when you actually go home and sleep. It really just depends on what you're working on at the time. If you're working on live deals, right, you can be there as long as it takes to finish it. But within my group specifically, it really was very manageable. A lot of people wouldn't come in on the weekends. A lot of people would take off at 8 or 9, and so all those rumors out there about never sleeping are not necessarily true. And if you want more details on kind of the day-to-day, what it kind of entails, feel free to come and talk to me. But I'm sure you have a pretty good idea. It has a lot to do with modeling, valuation work, client-facing work. So yeah, feel free to come up and talk afterward.
I thought we'd take the last 10 minutes and see if there are questions that you guys have. Can you who spoke, just stand? Any questions for specific people or for a question as a group? Back in the back, red.
Yeah, it's kind of for everybody, I guess. Maybe you don't know, but how does the junior internship interview, would you say, compare to the full-time interview? Is it caliber, is it harder?
It depends on the industry that you're, or the type of job that you're recruiting for. It's going to be different. It'll probably, it could be more technical. They could be a little bit more interested in that, but if you have, it's going to be essentially, I think, the same. more important for you to tell a story on why you're making the switch and why you're going to be successful with that switch. So I think it's very circumstantial, but you need to be prepared and kind of expect to know the same, if not more, for the full time.
Let me just add one comment, and then we can jump to the other questions. That is, obviously, it's harder to get a senior interview because the companies use the summer internships to hire almost all their people. So it's like one is more likely to happen than the other, so keep focused on the junior one. Please.
What would you recommend if you, for sophomore internship, you went into an internship that was unrelated to finance completely? I dealt with operations side. So as a junior trying to get an internship, if I wanted to go into investment banking or stuff like that, I know the on-campus internship is great, but I chose not to do it this semester because of certain restraints. So I'm going to do one next semester, but I know the interviews for the internships are going to be around that time. So does that matter just me being too late or any recommendations for what I could be doing?
Yeah, so, I mean, there's a hard truth, and that is that the competition is not just your classmates, it's Ivy League students who have been preparing for this for 10 years. That said, it doesn't mean that it's the end of the road, and so what you'll probably have to do to make up for it is be spot on with any interview you get. If people are willing to give you a few minutes to speak in terms of like an informational interview, you're gonna have to wow them, and so it does make it more difficult. That's just the hard truth, but it doesn't make it impossible. And so I would recommend, being very, very good on any technical question you could get, on any, behavioral question you can get, because unless you nail those 100%, given that the resume is not there, whereas every other candidate they're looking at does have the resume, there's that gap that you have to bridge somehow.
Just another comment too, and that is you may not get the ultimate job as your first job, but you can get into the industry, maybe a tier 2 firm or a boutique firm, and then move to wherever you want as you develop skills in the network. Other questions, please.
You guys talk about, we have each of us, I think, has a very interest in a certain field. But for example, if you're interested in investment banking and you don't necessarily get an offer or an internship in that, how do you expand your horizon necessarily? So if you're interested in investment banking, were you at the same time going to information sessions for corporate finance and pursuing that avenue also, or you just kind of specialize in what you do want to do?
So something interesting you mentioned is going to info sessions and all that. I mean, as of right now, I think the time I was in USC, and I remember everyone that was with me when we were juniors, you think you might know what you want to do, but you don't necessarily do. So I think there's no good reason why to miss any info session to any firm in the world, in any industry, or in any specific type of job in finance. So to that, you need to go to each single one of them, because you might think you know, but you might have doubts, and you might find out that, oh, I actually like this thing better than the other thing. And for that, you'd have to go and expand your options by actually exploring all the different career paths and being like, okay, I know I want to do investment banking for these reasons, but at the same time, I would be happy doing this because with this other path, because I've been to info sessions and understood what the job in this path is like, and I would be interested in doing that as well. And at the same time, interview and apply to all kinds of jobs that you would be interested in, which, I mean, it involves a lot more than that, because in interviews, you don't want to show them that you're just throwing your resume around trying to get any job. I mean, that involves a lot more than that, but just in general, I would say there's no good reason to miss an info session or any opportunity to learn more about a specific job or a specific career path, because you don't know what you want to do yet. You might think you do, but you don't. That's what I'm trying to say.
And just really quick to that effect, to echo what Preston said, there are incredible opportunities in iBanking. For that reason, when I was in your seat, I pursued it aggressively for about 2 months. I was networking like crazy. I did trips out to New York and to San Francisco. But all the while, I had been cultivating these corporate finance opportunities. And I ultimately decided for personal reasons that iBanking wasn't for me. But because I was proactive in seeking both, the best opportunities in both, I was able to still integrate internship opportunities. So just like he said, just be aware kind of what's going on overall and think about the big picture, not just narrow your mindset. I don't know. But I mean, if you know you want to do something, pursue it, but keep your options open, I would say.
Spread a wide net.
How does technical knowledge help in getting finance?
So this is a really good question. I've actually been asked this lately. The difference between banking and corporate finance, this is very general, but in banking, many individuals go into banking, do it for 2 years, and you learn an incredible amount, and then the exit opportunities, like you said, are incredible. Whereas in corporate finance, it's more of a career thing. It's not a 2 or 3 or 4 years, and then you'll switch to a different industry or career. But at corporations, it's kind of expected, hey, you can make a career out of this for your lifetime. And so in that sense, they're much more worried about, is this someone that we can shape, form, and create into what we want so that we can get here for 10, 15 years down the road. And so I would say it's much less technical than banking is. It still is. You should still understand the financial statements completely, be able to answer any question you have about DCF, valuation, or different types of ratios, or how something would affect something else. But it will, corporate finance interviews will be much less technical than, per se, a banking interview for that reason.
Right, I meant like, being, program.
You can say you know something and they'll think it's cool, but if you're applying for a finance job, you're applying for a finance job.
Sure, question?
How about commercial banking versus investment banking?
Let's see, we don't have anyone here to speak to that, but we'll try and find somebody. We've had less interest from students, so we're reflecting that. So nothing negative about commercial banks, it's just less interest. And same thing with real estate too. So going forward, we'll get someone to represent commercial banking and real estate. So I think there's interest in both.
I will say the Corporate Finance Club is over commercial banking, and much of our trips, we visit at least 2 or 3 commercial banks on each trip that we do. And so, we talk about it.
Okay. Other questions? Okay, thank you very much.